everyone, and welcome back to my channel. This is Dr. Mommy Budgets, and I am Amanda. I am here today to do a video on my refinance experience. Yes, I have refinanced my primary property, and I just want to go through some of the details that I had to go through in order to complete the refinance. All right, so I do have a few notes on my paper here, so I will be looking down here and there. But yeah, let's dive right into this refinance experience. Okay, first off, this refinance started somewhere around September of 2020. September of 2020. Yes, this is February 2021. Okay, so naturally it ended in February 10th, 2021. Okay, stay with me. So that was approximately 5 months, give or take. Let's just say as I got going into the process on a consistent basis, let's just say the entire process was 4 months. Okay? I guess not too bad. So, here's some of the reasons why we had a 4-month period. Of course, naturally, it's going to be because of the pandemic. Okay? So that slowed things down because we were having to wait on people to process information, and then it took 2 or 3 days for people to kind of relay the information to you. If I had to get documentation, all of that type thing, it was taking time. People are working from home. So yes, we had those type of situations going on. That was one thing. The second thing, and actually the most important thing to me, was me looking at the numbers, because when you're doing a refinance, they give you like a pre-qualified amount and a breakdown of what your new interest rate will be, and some of the generic closing costs and that type thing. So yeah, it was me going through the numbers, and truth be told, y'all, I was like, okay, do I really want to do this? Because it's going to add this amount of money back to my loan, and I paid this, a certain amount down on it, and I went back and forth with that probably like 2 weeks. Okay? Also, like I just said, the thing was this going to actually benefit me? And to answer that up front, I'm going to answer that question again at the end, but up front, the refinance will benefit me. Will it benefit me? Yes and no. Okay? And the third reason as to why we have this length of time in this process was because of, like I said, the underwriter. I kind of alluded to this, the underwriting process, where they're asking for tons of documents. And in some cases, I had to resubmit documents because I had already submitted those documents to one loan officer. Then they switched my loan officer mid-process. So I had to resubmit some of them again. So yes, that is pretty much the longest process of doing a refinance, the underwriter. They want to know all sorts of information. Why do you have another property? How much money do you have in this bank account? Do you have any other expenses? All sorts of information. Okay, so that is pretty much the process. And as they were going through the months, it wasn't too much of a big deal for me, because and one of the real reasons why I think it really wasn't a huge deal to me as it relates to hurry up and complete this. I need to get this done. I want to hurry up and get this done, is because in the back of my mind, I really did not want to have to pay a higher mortgage balance because of all the closing costs and title fees and attorney fees that are added to your new loan. So that was the thing for me. So it was kind of like, hey, it was going to benefit me, I guess, both ways, because if they did prolong it, it kind of, in the back of my mind, I'm saying, hey, I do not have to start on this big chunk of money right now, but also I continue to pay down the existing mortgage so that when the new mortgage company, after the refinance, acquired that loan, they would not have had, such a large amount to pay. Well, it was a large amount, but it would have been less because I was continuing to pay down the loan. So benefit for me, both ways. But yeah, so that 4 to 5 month process, yeah, it was a long amount of time, but like I said, it didn't bother me. Now, let's dive right into the numbers. I know this is why a lot of people want to listen to these videos, to kind of see how you go from the old numbers to the new numbers. All right, new mortgage versus old mortgage numbers. All right, here we go. Now, my new monthly payment is going to be $804 per month, as opposed to the old mortgage amount, which was $857 per month. Next, the new interest rate is going to be 2.75%, as opposed to the old mortgage, which was 4%. So yes, that's definitely a larger difference there. Now, the one thing that I do not, I wasn't a big fan of, but I had to do this refinance. And actually, I never did really tell y'all why I had to do refinances. It was actually for two reasons. One reason, because I noticed that the interest rates were very low. I was currently at a 4.0%, and they were offering the 2.75. So that's one reason. The second reason is because I had to refinance the mortgage into my name, and per my divorce decree, I had a certain amount of time that I had to do that within that time frame. So yes, so I definitely had to do it, or I would have had to sell the house. So that's the thing. So now I am glad that's done. I now have the mortgage in my name, and we can move forward with paying this bad boy off as fast as possible. But anyway, with that came a mortgage insurance plan. So basically, I had to get a mortgage insurance, which is now going to be $68 a month. Okay? As opposed, that's the part of the new mortgage numbers. The old mortgage numbers, I had a conventional loan, did not have the MIP. Okay? And that's also a difference between these two loans. The new mortgage loan is a FHA loan, although it has a fixed rate, and the old mortgage loan was a conventional loan. Okay? Now let's stop right here. So I'm going to tell you why I only qualified for FHA loan, which is a government loan. It's a federally government-backed loan, as opposed to the conventional loan. The reason being is because my credit score wasn't as high as it needed to be. Now, this is where I feel that this mortgage world, these loans in general, this credit game that we play it's just, I'm so over it. The reason why my credit score was lower than they needed it to be for me to get a conventional loan is because I do not have a whole lot of credit. It is not from lack of payment. If you have been following me in old videos, or if you are new to my channel, welcome. I only have two debts. The two debts are student loans and the mortgage. So I don't have a lot of revolving credit cards and car loans. I don't have either one of those that can keep tapping my credit to make the credit score go up. And I do that by choice. I do not want to have credit cards. I don't need them in my life. And also, I do not have a car payment. I don't need or want a car payment in my life. So that's the reason why I was only able to qualify for the FHA loan as opposed to the conventional loan. Yes, didn't care for that strategy at all. You know, that kind of frustrated me a little bit, but hey, nonetheless, I had to get this done. So there you have it. Now, the new balance. The new balance of this loan is $104,800 as opposed to the old loan, which I had paid down to $96,500. So basically, that was an increased amount of $8,000. That's the part that I do not care a lot about at all. So that, like I said, that includes your closing costs, that MIP or mortgage insurance protection, prepayment, the origination points on the loans, just a gamut of fees that, you know, processing fees, underwriting fees, attorney fees, title fees, deed fees, all sorts of fees. Increase of $8,000. Now, we're going to go back and we're going to ask this question again. Was it worth it? And the reason why I said yes and no is because the no portion is I did not want the increase of $8,000 on my mortgage, but the yes is because now I have the mortgage solely in my name. It is my property, you know, by myself, and I can move forward with paying the loan off the way I want to, which is going to be Speedy Gonzalez form. I'm going to pay this off really, really fast. That's my plan anyway. So there you have it. That was my refinance experience. And like I said, overall, it was a pretty good experience other than the $8,000 increase. But I do have a plan to tackle that. For those who have been following me, you probably already know how I'm going to do that so that I can kind of get myself back down to where my balances were for my two debts, which are my student loans and my mortgage. So I am going to end this video right here. Let me know if you've refinanced. Are you taking advantage of these low interest rates? Because they are like at some all-time lows right now. I don't even know if they're going to ever be this low again, but who knows with the way the economy is going right now. But yes, I did go from a 4% interest rate down to a 2.75 interest rate. So that just means that a lot of the monies, the mortgage monthly payments that I will be making per month will be going directly to the principal. So more of that money will go toward the principal, plus I will be making extra payments. So we're going to try and knock this back down as quickly as possible. That's all I have for this video. This is Amanda. My channel is Dr. Mommy Budgets, where we dream big but start small around here. I will see you in the next one. Peace.